This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Thursday, November 3rd. As my colleague David Pan has been reporting, Bitcoin miners have been having a very rough time. To paraphrase one of his recent stories, falling Bitcoin prices and rising energy costs led to combined second quarter losses of more than $1 billion. For the top three publicly traded players in the US, Core Scientific, Marathon Digital, and Riot Blockchain. Yikes. This crunch has led to miners trying to raise cash by selling off their emergency stockpiles of Bitcoin right into the teeth of a down market. But at the same time, and here's where you'll hear from my colleague Michael Smith, miners continue to flock to places like Texas, where not everyone is a fan of those recent arrivals. Why? Well, Texas isn't known for having the world's most stable power grid, so miners and state officials have had to pilot ways to address concerns about this rising energy consumption. We're going to turn now to Bloomberg reporters David Pan and Michael Smith. David, Michael, good to have you on the show. Probably not so good for the people we're going to be talking about today, who are the Bitcoin miners. David, I'd love to start with you because you've been reporting extensively on the state of the industry, which seems, from reading your reporting, not to be great right now.
Yeah, definitely. So when you look at the mining revenue for all the Bitcoin mining companies, we are seeing like record lows constantly in recent weeks. And there are three major reasons. The first one is apparently the low Bitcoin prices. It started from earlier this year. The market crashed. The second reason is the soaring energy costs. And earlier this year, we have, the Russian invasion into Ukraine that kind of increased the gas prices for the whole energy market. Later this year, we see the heat waves across the southern states in the U.S.
And nearly all industrial-scale Bitcoin miners in Texas have shut off their machines. That's as the companies brace for a heat wave that is expected to push the state's power grid near its breaking point. The state has become one of the world's
largest.
And
then we are seeing more competition. Which is a little bit counterintuitive because we see low prices, we see high energy prices. Mm-hmm. But at the same time, miners continue to install their mining machines. So a very big reason for that is because they bought so many machines during the bull market, starting from last December, last November, and now they finally got the machines. And the prices are crashing, but at the same time, they have to install or to continue to build up the capacity because they've already invested like tens of millions of dollars into the infrastructure. They have to finish it so that they can actually prevent further losses in this bear market.
The very definition of sunk cost fallacy, it sounds to me. But, Mike, you spent a bunch of time interviewing miners in Texas, and you sort of like written about what that experience was. And one thing that struck me from your reporting was like this fundamental optimism about a lot of those folks, despite the conditions that David are describing.
Yeah, it's kind of interesting. I met a lot of folks who are actually building out mines, or certainly all have dreams of building mines. And those dreams really haven't been diminished from what I can tell. It's kind of like the psychology of oil, people who are looking for oil and gas, they're always looking to strike it rich. And Texas is by definition the kind of place that invites that kind of sort of enthusiasm.
We've seen in, the last few weeks of October that gas prices in Texas are actually like declining significantly. There are supply problems. It's a complicated story. It's always a complicated story. But some of the costs are coming down. But at the same time, miners are trying to cover those costs by selling their Bitcoin into a market in which Bitcoin is hovering like below $20,000. What are the analyst projections for how this is going to play out in Q3 earnings and Q4?
You will see like the negative impacts from the climate, because they kind of like scaled back a lot of mining operations during the summers. That will directly affect their revenue for the third quarter. And for the fourth quarter, I think that is a very interesting time for us to see, because as Michael said, some part of the costs are decreasing. For example, like the energy prices, because it's getting cooler, and the mining rigs are getting cheaper. But at the same time, we are seeing increasing costs in other areas. For example, the borrowing costs, like, the lenders are scaling back.
Right, and interest rates are rising generally.
Exactly. And lenders generally just like have less trust in Bitcoin miners because
I mean,
yeah,
fair.
And then we also have this like a very wonky but super important gauge, which is the mining difficulty. That is the measure of computing power used for Bitcoin mining. So previously we mentioned that there are a lot more miners. They are forced to continue to build out their capacity. That will actually increase the mining difficulty for everyone who's mining Bitcoin, which means this will lower the revenue for each miner. So this is sort of like a zero-sum game. So the more miners there are, the more mining power there is, the less revenue each miner will have.
Mike, can you talk about some of the specific things that folks in Texas are doing to handle like this kind of confluence of events, especially on the responding to the concerns that many people have identified about the strain on Texas's power grid?
The regulators in Texas, which is quite lightly regulated, have basically this year come to grips with the fact that there's this enormous potential power drain to Bitcoin mines on a grid which is quite fragile. So they are trying to accommodate it in a way that doesn't short out their grid. And the main thing that they're relying on is for Bitcoin miners to turn off their computers when electricity is peaking so much that there might be blackouts. And right now, there are a lot of incentives in place in Texas for them to do that. Mainly, they get paid to do it. But it's still a voluntary program.
Bitcoin miners in Texas are taking the week off to keep the state's energy grid intact. Hot weather, the war in Ukraine, supply chain bottlenecks are sending energy costs higher. And that's beginning to...
Mike, you made the point that like mining in Texas has, consistently increased year on year. But a lot of the demand management programs that, the Texas power grid operator, ERCOT, and others have put in place have happened with mostly declining prices. There were absolutely a few folks who were operating when Bitcoin was trading at, above $60,000. But I would say just from a timing basis, that like a majority of these plans have been rolled out when prices are either falling or kind of like range bound. And so, David, it's like if we are having a conversation and Bitcoin prices are back up at $65,000, what we may find is like less pseudo-altruistic willingness from folks to be like, of course we will unplug our computers, like no problem. That will certainly be an interesting thing to keep
And you're
an eye
going
on.
to see more underground mining operations if that happens.
Well, I remember one of the things that you told me, David, is that like China was just very good at identifying where there were these large farms because they're like, seems like a lot of people using a lot of electricity over there. Mike, do you get any sense from the operators in Texas or any other places that you've reported from that they have that kind of monitoring infrastructure, or are they really relying on like word of mouth and goodwill?
They certainly have the infrastructure to monitor it, but I think what you have in Texas is that they want Bitcoin miners to move in. They want them to plug into the grid. They're doing everything they can to facilitate it, as opposed to sort of watch over it and regulate it. So they don't need to go underground. As long as they can convince a utility to give them the electricity they want, they do have to technically have the capacity. They can do whatever they want. There's no restrictions.
Coming up, you'll hear more from Bloomberg reporters David Pan and Michael Smith. We'll be right back. Let's talk about Jahan Wu quickly, who, is at BitDare Technologies and has come out with an interesting plan to get more involved in, shall we say, salvaging some of what's happening with mining. David, can you tell us a little bit more about this?
The company set up a distressed fund for Bitcoin miners, which essentially means that they're setting up $250 million fund to buy distressed assets from other mining companies. It's almost like vulture capitalist, like they're buying cheap assets, like, in a later time, they will benefit from it.
Mm-hmm. How do those other companies feel about Bitdeer building this up and basically just like waiting for them to have some trouble?
Those companies, I feel like, they're probably looking for opportunities to sell their machines. Maybe they'll get in touch with the fund and see if they can actually sell some machines to Jihan Wu's fund. But at the same time, I think it's almost like a music chair situation. Everybody's hanging in there, and when the music stops, they just hope that won't be me, that won't be themselves, and then they'll just like survive this cycle and make huge profits later when the market comes back.
David, you are planning to be spending some time in Texas again for another conference related to mining. And, in the newsletter, subscribe to the Bloomberg Crypto newsletter. In the newsletter that you wrote about this, you mentioned that a group of miners are having like a commiserative drinks session where they're like, hey guys, it's rough out here. Like, let's get together and share our sorrows. Which is really interesting to me because, Mike, you described like this fierce competition, this potentially challenging pricing environment. And David, you're like, there are people who are waiting for other people to kind of go bust. And yet they seem to still have this sort of collaborative relationship.
Yes, it's a very small circle. So the event is called Support Group for Executives from Mining Companies. I think it is a very small but very interesting circle because like you have Marathon, Riot. I mean, all of these companies, they have the mining stocks are essentially like very similar to meme stocks. They are driven by publicity and everything. So like what you see is actually in the circle, you see a lot of big personalities, especially in the C-suite of these mining companies. And then they don't really want to they're making mistakes and they don't want to see their companies failing, like in front of their peers, something like that. So I think that would be really interesting to see, who will be able to survive.
Right.
But at the same time, it's a sad moment for mining companies because they're not doing really well.
Yeah. What an interesting time in crypto.
Yeah, I was going to say, just to add to that, I've been to a ton of these. They have meetups every month in Houston, for example, and other places. And what's interesting to me about the culture is that it really is egalitarian in a way, and they like to play that up. So you go to these meetings, and I'm sure you'll see this at the support group, where you'll have the CEO of Riot, the mine they have in Texas, hanging out with this guy, this 22-year-old kid who has no money, no stake in the game, but has a really cool idea. And they really do like to let anyone talk about their dreams, so to speak. I think because a lot of them come from that background and they've had this meteoric rise and they really respect it. But it's also because of the philosophy behind Bitcoin. A lot of these folks are very ideologically faithful to Bitcoin and they believe it's like a way of life. And you see that in the enthusiasm they have for the business and the way they like to listen to all ideas, but also in the way, it's quite Darwinian. Like a lot of them are waiting to swoop in, like Bitdeer is doing with that fund, and buy out a guy who's gone broke, or a woman who's gone broke.
Mostly dudes.
A person who's gone broke. All this sort of philosophical foundation to Bitcoin and the kind of folks it attracts and converts it attracts feeds these phenomena we're talking about. It feeds into the way the businesses are run and the way they're reacting now. And it also explains a lot about why they're flocking to Texas, because they can do whatever they want and they have the actual system supporting them.
So much of crypto is a tech story, and so much of every tech story is a culture story. Yeah. And how the culture, the beliefs, the norms, the practices, as you say, don't just inform how things happen, but in some cases determine what those outcomes are. Well, thank you both for joining me. It was a pleasure, as always, and happy to have you back on the podcast anytime.
Anytime.
Thank
Wonderful.
you.
You can find more of their reporting on the Bloomberg terminal, on Bloomberg.com, or on Twitter. Mike is at Smith Markets, that's Markets, and David Pan is at DavidPan_1. That's DAVIDPAN_1. On the next episode of Bloomberg Crypto, we'll tackle crypto company earnings, Dogecoin and Elon Musk, and who the must-read Bloomberg opinion columnists are for all things digital assets. Spoiler alert, yes, one of them is Matt Levine. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.